Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and this is our first show of 2023. Check it out. My mic does not want to stay. It does not want to stay put. I guess that's what happens after you've been off for a while, right? Welcome to 2023. So I hope that you guys all had wonderful holidays. I definitely did not. I was sick. I had COVID. Definitely not a fun week for me between Christmas and New Year's, or the week after New Year's. So you guys have not seen me on for a while, but we are in a new year. We're in 2023. And I know that everybody has been asking, well, what's going to happen this year? We've got tons of buyers that have been sitting on, the sidelines, not buying. They were waiting to get through the holidays. They've been thinking, should we buy this year? Do we wait? Are property values going to drop? So I wanted to focus on all of that in this show to make sure that you guys know exactly where we're at. What am I reading? What am I seeing? What am I hearing? I'm going to take you through all of it. And there's tons of different schools of thought. I found a fabulous article that actually had quite a few different analysts who all had different opinions. So we're going to go through those, and then we're going to sum it up to figure out, should you guys be buying this year? Is 2023 your year to become a new homeowner? Or maybe should you be looking at doing a refinance? What's going to happen to your property value? Are you better to try to get some cash out now rather than wait for later? So we're going to hit all of that in this show today. Today is the first show of 2023 for Mortgage Mom Radio. I'm super excited to be here. I want to remind everybody that this is an you can interact with this show. It's an interactive show. Thank you so much. I'm rusty. I am rusty. But we want you guys to ask your questions. I want to know that you're there. I want to know that you're watching, and I want you to be part of the conversation. So please don't hesitate to put those questions in the feed. I can see that Heidi jumped on, said Happy New Year. Happy New Year to you, Heidi. Espolen Locos, I think I got it right this time. He says, hi, gorgeous. Happy New Year to you and the show. Thank you so much. I do appreciate that. So happy to see all of you guys here. So we are going to take a super fast commercial break so that I can try to get this microphone to stay where it's supposed to. And then we'll be right back, and we're going to jump into this article that I found that I feel like it gives us every different scenario that could happen for 2023, and then we can all chat and talk about it. So stay tuned. We'll be right back.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so how do you guys contact us? And this is really important because once we're done with this presentation today, you may decide that now's the time. You want to get things started. You want to ask us questions. Let me just tell you that anywhere at all that you look for Mortgage Mom Radio, you can find us. Everything is Mortgage Mom Radio. Don't forget the radio, because there are a ton of people that try to call themselves Mortgage Mom, but Mortgage Mom Radio, you will find us. The website is mortgagemomradio.com. On Instagram, we are Mortgage Mom Radio. You can see it all here. It's on this screen.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom. This is the first show of 2023 for Mortgage Mom Radio. And of course, we're going to be coming at you every single week right here on Wednesday live. So the best way for you to know that we've gone live is to get yourself a text message. It gives you a link directly to the feed for YouTube so that you can follow along, interact, and ask your questions. For you to get yourself joined to know that you are going to get on when we go live and you can be part of the show, you need to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Now that is also the phone number for you to reach our office. Give us a call if you have any questions whatsoever. Maybe you're a little shy, you don't want to ask them out loud where people can see your comments, or maybe you just want to be able to talk to us on the phone and get a little bit more in depth, in detail about you and your scenario, looking for some information and education to try to figure out what's the best way for you to move forward. At the end of the day, our goal is to try to help you, to educate you, to give you your options, and to create that relationship with you that you feel comfortable working with Mortgage Mom Radio for your financing. However, I cannot tell you how many times that I have had clients call me where I have outright said, I'm not the right person for you. This is what you need to do, and this is where you go to go get it done. So please use us as your sounding board, as your education to get the information that you need to make the right choices for you and your family. And here we are at the beginning of the year. It's 2023, and we need to make sure that we're all making the right decisions for our finances. So it is, we're coming off of 2022, was not a fabulous year for everybody. Interest rate hikes were crazy. They more than doubled mortgage rates from the beginning of 2022 to the end of 2022. Is that going to continue moving forward? Well, that's what we're going to discuss today. What's going to happen to property values? That's what we're going to discuss today. But are they going to continue to rise? In my personal opinion, I do think that they are. Interest rates have actually come down a little bit from where they had peaked in 2022, which is a really great timing right now for anybody at all that has been thinking about purchasing a home or refinancing their property. Take advantage while we've got this little bit of a dip that we're in, because I don't think that it's going to last for long, and especially based on the articles that I've been reading and the one that I'm going to read to you today, because this one actually gives a ton of different opinions in it to try to get you all the information that you need to extract what you need for you and create your own opinion, right? We want you to create your own educated, decision on what is best for you. So Heather did jump on. She says, hi, everyone. Happy New Year. Heather, thank you so much for watching. And again, I want to remind everybody, this is an interactive show. Please feel free to put your questions and comments into the feed. I am more than happy to read those out loud, answer the questions, or give everybody, your opinion in what we're talking about. So please feel free to do that. This is interactive. We want everybody to enjoy this show. So here we go. I'm going to give credit on this article to Bankrate because, like I said, I read, and this was the one article that I felt was really fabulous because the person that wrote this article had so many different pieces of information in it from different analysts. So we're going to read through this today, and then we're going to all take from it what we feel is going to happen in 2023. So this one is, like I said, it's from Bankrate. It was written by Eric J. Martin and edited by Troy Segal. So I do want to make sure that I'm giving credit where credit is due. This is not I did not write this myself, the Mortgage Mom. I'm just reading you guys an article that I think is fabulous. So this one is talking about housing market predictions for 2023. So that's where we're going to start. It does say that consider that at the time of this writing, and this was actually written at the beginning of this year, right at the beginning of January, that the average 30-year fixed rate mortgage is at 6.63%. So mind you, we have talked many times at the end in December where we were talking about getting into interest rates that were in the 5% range. Every loan program does have a little bit different pricing, different interest rates. So they're talking about an average. So conventional rates are going to be a little bit higher than the government rates, such as a VA loan or an FHA loan. Many home buyers right now, and even homeowners that are refinancing, are paying points and buying down interest rates to get their interest rate lowered. So many times we're closing loans right now where interest rates are in the fives, 5.5, 5.875, but under 6%. So this is just an average, assuming that you're not paying any points, conventional loan. As of the date of this article, which was the beginning of January, the average 30-year fixed rate was 6.63%. The inflation rate was at an alarming 7.1%. Now, one thing I do want to say about that is that it was actually as high as, I believe, 7.4 was the highest. I think they were concerned it was going to start getting to 8. So 7.1, although that is really high, and I know it's concerning to most, and even in this article, the way that they're writing that, for me personally, we have stopped rising and we have started to decline. So in my opinion, we're definitely headed in the right path. Now, do we have a lot of work to do? We do, but we're definitely headed in the right path, which is great because in my eyes, I see recovery on the horizon. So I do want to make sure that I point that piece out. Now it says the inflation rate is an alarming 7.1%, and sales of previously owned homes dropped 7.7% in November to a seasonally adjusted annual rate of 4.09 million units per the National Association of Realtors. So I liked this article because they were pointing out where they found their information. So we know that this is reliable, which means that existing homes are selling at the slowest pace observed in 10 years. So that is huge. That is something that we definitely want to make sure that we understand. Over the last 10 years, we are selling at a slower pace. That means the homes are going to stay on the market a little bit longer. We're going to see a little bit less homes turn over. So we're going to see, less home sales. So we're in a slow period right now. So what does that slow period mean, right? If you're thinking about maybe buying a home, you're thinking about selling a home, or you've been thinking about refinancing, this is all very important to all of you because you need to understand what does this data mean, right? So it says, we reached out to several industry experts, each of whom offered interesting forecasts and projections about where mortgage rates, home prices, buyer competition, housing supply, sales activity, and home affordability are headed in 2023. Curious what the pros think? So yes, of course, that's why we're reading the article. Read on for their evaluations and predictions. So I did really, like I said, I thought that this article was fantastic. So it starts with, will mortgage rates continue to climb? And I'm going to tell you right now that I do believe that we are going to see over this year of 2023, we are most definitely going to see that interest rates are going to end the year higher than where we are today. So what does that mean for you? If you have been thinking about trying to take cash out of a property, you've been thinking about doing a refinance of any kind for whatever the reason might be, you want to make the phone call now. You want to talk to us now. I've said this all the way through 2020, 2021, 2022. I kept telling you guys over and over again, stop the bleeding. If you've been thinking about doing something, pick up the phone and get it started. Stop procrastinating. I have a lot of clients and customers who have called, and they all are, not all, but many of them are in this disbelief that something's going to change and interest rates are going to drop out of nowhere, and that right now they just need to stop. They just need to wait. Well, the question is how long can you wait? If you've been thinking about buying a home or you've been thinking about refinancing your property, you need to get cash out for whatever that reason might be. You're wanting to do an addition, you're wanting to do home improvement, you're wanting to pay off some debt. How long can you wait for things to turn around and change? I'm going to read this article, and I think by the end of it, you're going to get the same feeling that I have, which is it's not changing this year. So can you wait 18 months? Can you wait 24 months for interest rates to drop? Or do you need to get on with your life right now? Everybody has a different scenario and everybody has a different reason for why they need their financing. So only you can answer that question. But if you've been thinking about doing it, you've had it on hold, you've been thinking interest rates are going to come back down, and you've already been waiting for 6 months or a year, you're going to be waiting at least another 18 to 24 months in my opinion. The Mortgage Mom's opinion, you're going to be waiting quite some time. So let's get back into this article. And again, I just want to remind everybody, if you have a question, you have a comment, or you want to say something, this is an interactive show. I do want you to please feel free to put something into the comments and to let me know that you're there and to ask me your questions. I will absolutely answer those for you. And if you're watching this at a later date on YouTube, on Facebook, you're listening by radio, and you want to be able to be part of the action, you want to be able to ask those questions during the show, watching the live feed, then you need to know when we go live. And the best way to do that is to get your text message. It is one per week, and I promise I do not spam you. That is all you get, is letting you know what the topic of the day is and that we're getting started, and it's a link to join. So if you would like to do that, text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Same exact phone number to give us a call, talk to us, and get your loan started. So just remember that number. It's 844-935-3634. All right, so let's get back at it. Will mortgage rates continue to climb? So it says interest rates roughly doubled in 2022, and mortgage rates were no exception. But how about across 2023? Will the cost of financing a home be coming down this year? So I had actually mentioned all of that when we first started a little bit earlier in the show, that we doubled those interest rates from the beginning of 22 to the end of 22. It was definitely a very, very rough year, that is for sure. Heather is asking, I'm just going to read what she wrote. She says, I was reading an article this morning that said the recent rate drop has sparked a 5% increase in home mortgage refinance. So I'm glad to see that some people are taking advantage of the recent drop. And Heather, you are absolutely correct. And as we get further into this article, I do believe that you're all going to agree that if you've been thinking about doing a refinance, taking cash out, right now is the time to do so. And I'll kind of jump into those HELOCs as well as we start talking refinance stuff. Tom jumps on. This is my dad. He says, hi guys, just left Uncle Ed. He's looking better. My uncle has been in the hospital for months and months and months battling cancer. So Dad, thank you for the update. I have been wondering how that is going. Heather says, what are your thoughts for people who have taken out a HELOC or a HE loan over the past year to refinance it into just a first? And Heather, I think it's actually a really good time for people to do that. And it really does depend on how much that they took out in that second lien. So if you have a mortgage that's $1 million and you took $100,000 second lien and your $1 million mortgage is at a rate of 3%, it's probably not a good idea to do a refinance to combine everything. But if you have a mortgage that's $400,000 and you took out $100,000, $150,000, you're starting to approach the territory of where you might end up in a better blended rate by doing a complete refinance of both debts and rolling it all into one. So Heather, that was actually a great question. And I am going to touch on that more as we get, through this article a little bit further into the anticipated interest rates, what's to come, right? But definitely, if anybody out there has a second mortgage that they've already taken, whether that be a HELOC or a HE loan, home equity line of credit or a home equity loan, and you're thinking maybe we should just roll it all into one and we should combine it, please don't wait. Please call right now while we've got this quick dip in the rates. We're definitely lower right now than where we hit and we saw our peaks of 2022. And we're going to continue through this article, but we're definitely going to probably end up moving higher here in the very near future. So definitely reach out, get those questions started. Let's run that blended rate calculator. Let's see where you're at. And how do you do that? Well, you call the office, you go to the website, do whatever you got to do to find Mortgage Mom Radio. If you guys search Google Mortgage Mom Radio and do not forget the radio, you will find us. It's mortgagemomradio.com. It's Mortgage Mom Radio on Instagram. It's Mortgage Mom Radio on Facebook. It's Mortgage Mom Radio on TikTok. You guys will find us and you can reach out to the office or you can call that number I gave you guys earlier. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So let's get back into this article. So it says, some say, will the cost of financing a home come down this year? So that was the question that they're going to now start to answer. And it says, some say no. Continued inflation, overall higher interest rates, a potential recession, and geopolitical tensions will force 30-year and 15-year mortgage rates up throughout 2023 and will bring the two rates closer together as short-term risks rise. So that was from, it says, cautions Dennis Shershikov. So I just want to make sure that you guys know he is a strategist that they took this information from. And again, I want to remind you guys, I pulled this article because I loved that they actually said who the person was, the analyst that they were getting the information from, so that we can choose to decide whether or not we want to believe what we are hearing, right? It's all about education and then you understanding what it is and whether or not you want to hear what they're having to say. So he is expecting that we are going to see interest rates jump up at least 1 to 1.5% throughout 2023. Now it jumps into Robert Johnson, a professor of finance at Creighton University's Heider College of Business, shares some of those sentiments. By the end of 2023, financial market participants expect that the Fed will have increased the target Fed funds rate by 175 to 200 basis points from the current levels. So many of you don't know what basis points are. You shouldn't know what basis points are. You are not in the industry that I am in to understand what they were talking about. But 100 basis points is 1%. So 175 would be 1.75. 200 would be 2.0. So if the Fed funds rate right now today is at 5, let's just say, and I don't know exactly what it is, I'm going to be honest with you. I want to say that we were at 4.5 before they did their December meeting. We went up another half. So I do believe that we are at 5, but I'm not going to lay my hat on that. I would have to actually go back and just do a once over. I've got COVID brain fog, trust me. But I do believe we're right at about 5%. So that would mean that by the end of 2023, that they would expect that the Federal Reserve prime rate has been increased to somewhere between 6.75% and 7%. So that is what they are saying in that, in this paragraph, right? And it says, then gradually come down over the course of the year, somewhat to hang around in the 6% and 5.25% respectively. This is entirely dependent on the Federal Reserve's ability to get inflation under control and ease up on its aggressive rate increases. So I know that actually got kind of it wasn't as smooth as it could have been since I decided to explain to you guys what basis points are. So I'm going to start the paragraph over and reread it all the way through so that it makes more sense. So Rick Sharga, executive, I'm sorry, that's where that got messed up. Okay, let me go back. I'm reading and I'm talking to you guys. So Robert Johnson, a professor of finance, professor of finance at Creighton University's Heider College of Business, shares some of his sentiments. By the end of 2023, financial market participants expect that the Fed will have increased the target Fed funds rate by 1.75 to 2 points from current levels. That would translate into 30-year and 15-year mortgage rates at roughly 8.5% and 7.7%, he says. So again, remember that the beginning of the article started with the average interest rate at the beginning of January, which is still, it's kind of been holding steady the last couple of weeks. We have not seen a lot of major movement since the beginning of the year. We have an average interest rate right now of 6.63. So this person, Robert Johnson, is expecting to see interest rates for a 30-year fix to be at 8.5 and a 15-year fix to be at 7.7 by year end. Now, Rick Sharga, and this is where I kind of messed up because I ended up reading the end of his paragraph. Rick Sharga, Executive Vice President of Market Intelligence at ATTOM Data Solutions, which analyzes real estate and property data, is more hopeful. He says that rates peak at about 8% and 7.25% for the 30 and the 15 year. So remember, everybody, that 15-year fixed rates have a lower interest rate than a 30-year fixed rate. So he's saying 30-year fixed rate is going to be around 8%, and the 15-year fixed is going to be around 7.25%, then gradually come down over the course of the year somewhat to hang in the range of 6% and 5.25% respectively. So by year end, he is expecting to see 7.25% on a 30-year fixed. We're at 6.6 right now. So going back to the beginning of the show where I said, I do believe that we're going to see interest rates at a higher number by year end. Get something locked in now today. If you've been thinking about doing refinancing, I'm going to stay strong to that because we've now had Robert Johnson and now Rick Sharga, both from completely different places, both doing different analyzing and analytics, both saying that they're expecting them to go up. Now, one says it could be as high as 8.5. The other says 7.25. So you're going to have that range of where is it going. But the general perspective is that it's going up, right? So it does say from Rick, he says, this is entirely dependent on the Federal Reserve's ability to get inflation under control and ease up on its aggressive rate increases. So one thing about those rate increases that I did like was that in December, we saw that they increased the Federal Reserve prime rate by 0.5%. It did not go up 0.75% like it had the 5 times before. So they must have been feeling that difference, like I mentioned again also earlier in the show, that the inflation did not get higher and it was actually starting, although not a lot, it was starting to trickle down. So the Federal Reserve decided to only increase it by 0.5. Now, in my last show of 2022, I had said, I am really, really hoping that we are going to see the next Federal Reserve prime rate increase maybe at 0.25, and then maybe the next meeting after that, maybe they leave it be. After reading this article and other articles that I've been reading over the last couple of weeks, laying in my bed sick, I do actually think that we're going to see more rate increases than what I had said in my previous show in 2022. So we're going to keep reading and we're going to make sure that we all come to the conclusion and each one of you get to create your own conclusion based on the information that I'm providing. So that's what's so great about this article. So here we go. It says 3 different roads for interest rates. Okay. Nadia Evangelou, senior economist and director of real estate research for National Association of Realtors, meanwhile envisions 3 different rate scenarios occurring in 2023. So she's saying, which I can understand because nobody has a glass ball. Nobody can actually tell you and predict exactly what's going to happen and be right. But she's giving you 3 different things that she sees that could come to play. Okay. So in scenario number 1, inflation continues to remain high, forcing the Fed to raise interest rates repeatedly. That means mortgage rates will keep climbing, possibly near 8.5%. In scenario number 2, the consumer price index responds more to the Fed's rate hikes, and there is a gradual deceleration of inflation, causing mortgage interest rates to stabilize near 7% to 7.5% in 2023. In scenario 3, the Fed raises rates repeatedly to curb inflation and the economy falls into a recession. This could cause rates to likely drop to 5%, she explains. Okay, so we've got 3 different scenarios. This is from Nadia Evangelou, right? And she's saying, scenario number 1, we get to 8.5% by the year end. Scenario number 2, we get to 7.5% by year end. And scenario number 3, we fall into a massive recession and they actually drop interest rates to try to pull us out of the recession. And we might actually see 5% in the interest rates. So let's talk about those 3 things. Number 1, her scenario number 1 means higher interest rates by year end. So again, if you've been thinking about doing something, do it now. Scenario number 2, higher interest rates by year end. So again, if you've been thinking about doing something, get it started now. Scenario number 3, we fall into a massive recession and they're going to use the interest rates, drop mortgage rates to try to pull us out of the recession. So what does scenario number 3 mean for everybody? Well, if you've been a home buyer and you've been sitting on the fence and you've been sitting on hold and you've been waiting to purchase a home, when interest rates drop that far because we've hit this recession And we see that, home prices have come down, which we're going to get into in this article. We're going to talk about how much could home prices come down, right? But let's say that home prices drop 10%, interest rates drop. Are you prepared to go against those all cash buyers? Are you prepared to start that crazy negotiation, the overbidding, the multiple offers, the shortened terms, having to take away all of your home inspection rights and having to take away your appraised value rights? This is everything that we saw that was absolutely crazy in 2022 and a good portion of 2021. I'm sorry, in 2020 and in 2021. We saw absolute craziness where there were so many home buyers that were trying to buy that could not get in. They couldn't get in. So if that comes to play, her scenario number 3, again, if you've been thinking about doing something, do something now, take advantage of something now. So I'm just going to give you my 2 cents, but we're going to keep going through this article. If you have questions, if you want to ask anything, please don't hesitate, put it into the feed. I will read it out loud for you. You guys like the show, you're listening to it at a later date, you want to be interactive with us, text the word mom to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You want to know if you can get started, you want to get pre-approved, you want to talk about a refinance, you want to talk about your home equity line or loan, you want to get one of those going, give us a call, same exact phone number, 844-935-3634. We're going to take a super quick break so that I can turn the page, take a sip of water, and we'll be right back. Hi, this is Debbie Marcoux, host of the Mortgage Mom Radio Show. Hey, do you know what an FHA loan is? Well, tune in, listen up. It is a do-over loan, in my opinion. They've got great circumstances for anybody that's got lower credit scores, possibly a short sale or a foreclosure in the past, even a bankruptcy. Give us a call. It's 3.5% down to buy a home, and refinancing is there to help you as well. It's 844-935-3634. Or head on over to my website at mortgagemomradio.com. All right, so welcome back to Mortgage Mom Radio. I am Debbie Marcoux. This is our first show of 2023. I'm so excited to be back. I'm so excited to not be sick. Oh, boy, did I have a rough one between Christmas and New Year's, and I know that every shelf at every store was empty. I couldn't find Tylenol for my little guy. I could barely find Dayquil and NyQuil. I was hurting. So I guarantee that there were a ton of you out there that had the same cold, COVID, the flu. It just seems like everybody got sick through the holidays. So if you did, my sincere apologies to you that you had to go through that, but know that you had company. I was laying in my bed right next to you guys. So here we go. We're talking about our article today. This was from bankrate.com. Like I had mentioned before, I loved this article. I read tons of articles about what's happening. This is my industry. This is what I do. I have to stay on top of it. But I really, really liked this article because it was very thorough. It gave us all of the names of the analysts that they used to get the detailed information that they did to put out this article. I do again want to say that this came from Bankrate. And the article was written by Eric J. Martin, and it was written on January the 3rd, 2023. And you can actually find this article on their website. So if you want to go back and you want to read it for yourself, please feel free to do that. I am just bringing you guys education, and I thought that this was one of the best articles that I have read in a really long time. So we are going to keep going through it to make sure that everybody is on the same page. And where do we all draw our conclusions to of what are we going to expect this year in 2023? So it says, we talked right before the break about scenarios 1, 2, and 3 by Nadia Evangelou. So the next part of the article says, will housing sales decline? So like I said at the beginning of the show, we were going to talk, what do we think is happening with interest rates? What do we think is going to happen with the housing market? And we're going to talk a little bit about refinance and home equity lines at the end. So this article now starts to move into, will housing sales decline? So each of Evangelou's 3 scenarios for mortgage rates would have a major impact on home sales. In each case, sales will be down. It's just a question of how much. Higher rates under scenario number 1 could cause home sales to drop more than 10% next year. So we're talking, this is the year, we're talking 2023 this year. They're not talking 2024. In scenario number 2, home sales drop by 7% to 8%. And in the third scenario, home activity may also drop further, more than 15%. Now, I disagree with her in that part. And again, everybody has their own opinion, and you can draw your own opinion based on the information that you receive. Me being in the mortgage and real estate industry for as long as I have, this is my 29th year that I am starting right now in 2023. I don't foresee that. I see that if values do come down about 10%, which is what my prediction would be for 2023, I see that if values come down by 10%, and she is right, we fall into a recession, they drop the interest rates to try to recover the economy, and they give us interest rates back at a 5% mark, we're going to actually see home sales spike and pick up and get a little crazy. So that is, my opinion. We all have our own opinions that we get to draw from the data that can be extracted, and you get to decide what makes sense for you. I'm just the messenger, guys. I'm just giving you the information, but I'm telling you how I feel. So it says, our other experts agree the slowdown in home sales that beset the second half of 2022 will continue into 2023. Sharga believes the number of sales will continue to slow, likely hovering in the 4.5 million range, with new home sales at around 600,000. Listings may no longer go at lightning fast pace either. Days on the market have been climbing back toward more normal levels recently, and we could see them approach 30 days or more in 2023 as the market continues to cool down. So again, my prediction, Mortgage Mom's prediction, would be that we're going to see by the end of 2023 probably about a 10% drop in housing value. We are starting to see homes not sell overnight or before it's even hit the market or been listed in the MLS. It's not moving the way that it used to. If you're thinking about selling your home, you do need to anticipate that you're going to be listed for sale for probably 30 to 60 days before you do get a good offer on the home and you do enter into escrow. Now, it does touch on it later in the article, but one thing to keep in mind is that inventory is actually still low. It is quite low. The reason that things are slowing down is that there's still a lot of home buyers that are on the fence. They feel like interest rates are high and they don't necessarily want to pull the trigger right now, which is slowing down the demand from the buyer. So even though the inventory is low, we've slowed down in the actual amount of sales. And that is what this is talking about. It's talking about the amount of actual transactions. How many transactions or units do we think we are going to see in 2023? And that's where they said they believe that we're going to be somewhere in more normal pace, not what we saw in 2020, 2021, and even beginning of 2022. We're going to probably stay at about the same pace as where we ended 2022 throughout 2023. So keep that in mind. So it says Shirshikov, I think that's how they say it, is simpatico with those sentiments. So he agrees. The average days on market will increase somewhere between 2 and 3 times the current levels, he notes. So again, remember, when you hear 2 and 3 times current levels, don't panic. We are not selling homes in days. You might sit on the market for 30 to 60 days, and that is normal. So that's what a lot of people just aren't used to anymore. Things just are getting back to normal, okay? So Nancy actually jumps on. She says, Happy New Year's. You look fantastic. We miss you, Nancy. I miss you guys too. Can't wait to get back. We will talk about that later, but thank you so much for joining the show. I'm so happy to see your beautiful face on my chat. All right. So it says, interestingly, and so this is exactly where I was going, due to low inventory, home prices won't drop in 2023, Evangelou predicts. So remember, she gave her 3 scenarios. Then they gave 3 scenarios of what could happen to prices in 2023 based on her scenarios. But she says, due to low inventory, home prices won't drop in 2023. So again, everybody has a different opinion. You have to take the data and you've got to extract it to what you believe is going to happen. I tend to try to take this data way over here on the right, this data way over here on the left, and I try to go somewhere in between when I'm deciding what I'm going to do and the decisions that I'm going to make financially. So she says, I expect pricing to be relatively flat, increasing by 1 percentage point. So she actually thinks that we're not going to see any real appreciation in 2023. We might see maybe 1% appreciation. So no decline, no appreciation. That's her thoughts, right? Johnson, though, feels that higher interest rates will undoubtedly hurt home values and pricing. A soft real estate market with prices at levels lower than current levels will result. Well, again, he can't tell you how much he thinks that they're going to go down, just that they're going to go down. So you have to extract the data. That's not great news for sellers, but welcome news for house hunters. So again, going back to what I was mentioning before, when we see a spike, when we see property values have come all the way down, all the way, right? My opinion, about 10% is what we might see at the end, at the bottom. And rates come down, we're going to see craziness fill the streets again with all these people that have been sitting on hold and have been waiting and waiting and waiting. And that is going to be very, very difficult for our first-time buyers, very difficult for our clients that are trying to get in with zero down, our vets, our low-down FHAs, our low-down conventionals. It's going to be very, very difficult for you to compete in that market when all hell breaks loose. So just keep that in mind. There are plenty of potential buyers still patiently waiting to enter the market. Assuming home prices ease, you'll start to see some of these buyers emerge, especially the all-cash or lower loan-to-value purchasers who are less impacted by any interest rate concerns. So again, what they're saying is 2023, this is going to be the year where everybody else is sitting on hold and the investors with all cash or big down payments are going to start taking advantage of the sellers that have been sitting on the market for 30 to 60 days and they're desperate to get out of the home. They just want to get it sold. They want to get it gone, and they are giving good deals. People are getting fantastic deals right now. I am seeing things come through with $20,000 and $30,000 credits from sellers to help buyers buy down interest rates. Just keep that in mind. When these potential all cash and big down payment buyers come to play, that's when you guys should be thinking, maybe I should be looking at doing something right now. So it says, let's pick back up at that paragraph. There are plenty of potential buyers still patiently waiting to enter the market. Assuming home prices ease, you'll start to see some of these buyers emerge, especially the all cash or low loan to value purchasers who are less impacted by interest rates, explains Scott Krinsky, a partner in the residential banking department of Romer Debus, a Manhattan real estate law firm. Home values on a national level are almost certain to decline, at least modestly, perhaps between 5% and 10%, according to Sharga. So again, there's mine. I'm saying 10%. This guy's saying somewhere between 5 and 10%. One lady is saying she doesn't think that they're going to come down, right? Inventory's low. So extract what you will from what I'm reading to you guys, just trying to get you the education that you're looking for. Some of the more expensive markets will potentially see larger declines. Limited inventory, strong credit quality among current mortgage holders, and demand from young adults looking to become homeowners should help prevent prices from falling even further. So again, we've got a lot of people on hold. We've got a lot of young, upcoming families, people just getting married, just getting out of college, just starting their careers. They've been wanting to buy. Home values had gotten out of control. Even though interest rates were low, they weren't quite ready at the time. We have got an arsenal, and I want you guys to hear me say that. There is an arsenal full of people that want to buy homes that haven't yet. So when the tides turn, it is going to be a jungle. And again, that is the Mortgage Mom's opinion. I really do feel that this is the year, even though interest rates are high, this is the year to get yourself a really good deal, get yourself into a home, secure your property. When interest rates drop, refinance it, lower the monthly payment. This is a really, really great time to buy. So some of the more expensive markets, okay, we read that. So I'm going to stop, and I can see Drew just jumped on with us, and Drew's going to be the one that's going to edit this for me later so that it sounds better and it's smoother for podcast. So Drew, you get to edit that one out. All right. So will 2023 be a buyer's market or a seller's market? So I think that this is really great for all of you guys to hear as well. Again, such an absolutely fantastic article. I really just wanted to share it with you guys. I thought that this was a perfect way for us to start our first show of 2023. So for 2 years, it's been a seller's market. In 2023, will 2023 favor buyers or sellers more in most markets? Greg McBride, Chief Financial Analyst for Bankrate, says affordability issues and economic worries will depress home buyer demand, and inventory of homes available for sale will remain limited. So remember, if you own a home right now, and this is for buyers to listen, if somebody already owns their home, they took advantage in 2020 and 2021, even beginning of 2022, and they locked in a really low interest rate on their home. Chances of them wanting to put their home on the market for sale, even with the concern that property values could start to dip, they might lose some value in their home. Chance of them putting on that home on the market for sale is very slim because the monthly mortgage payment that they signed up for is better than what they could go get if they were to go buy again. So it's still going to keep our inventory low, even if interest rates are high, even if there's less buyer demand. So buyers might think, hey, we're in a buyer's market. Sellers may think, hey, we're in a seller's market. This is actually saying, and I 100% agree with this one, it'll continue to be more of a balanced market than tilting one way or the other. If you need to buy a home, you're going to buy. If you need to sell, you're going to sell. It's going to be very, very balanced throughout all of 2023. Inventory is going to stay low, which is going to help sustain prices from falling drastically. Interest rates are probably going to be higher by the year end. So again, like I said at the beginning of the show, if you've been thinking about buying a home, you've been thinking about doing a refinance, you've been thinking about doing financing, I would absolutely tell you that you need to make sure that you get something started sooner than later. Call our office, get on the books, talk to one of us, book an appointment. Every single person on my team is educated. All of them have been in the business for a very long time, and every single one of them can give you the exact same education, information that I can. And there's a very good chance if you call in, you're going to talk with me as well. So give us a call and let us help you to decide where are you at, what is your opportunity, and is this something that you guys can get started, should get started, or should be considering. So use us as your sounding board. Ask us your questions. That is what we are here for. Again, the phone number here at the office is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. You can also text the word MOM, MOM. It's spelled the same forward or back. Just don't spell it upside down. That's wow. But text the word MOM to that number, and you will get a text message once a week just letting you know that we have gone live so that you can jump on the show, you can interact, and you can be part of it. So we would love for you guys to join. The more, the merrier. Carrie's jumped on. She says, hey, y'all, I think we'll see more buyers this year. I think the shock of high rates wore off and people are ready to make moves. Just my thoughts. So Carrie, I agree with you. I do believe that we had a pretty big shock factor going on in 2022 when interest rates more than double within a 12-month period. That's going to put anybody in shock. If you had been pre-approved at the beginning of 2022 and then you waited 3 or 4 months and then you were ready to go buy, you found out you didn't qualify for as much as you did when you did your initial pre-approval. So it really did shake things up quite a bit. I do think that we have seen a lot of people put their lives on hold, decide that they were just going to rent, sign new lease contracts in 2022, sign up for another 1 year of rent. I think that what they're going to find in 2023 is that things really aren't that much different. If anything, interest rates are even just a little bit higher. Home prices are holding steady. They might be coming down a little bit, but it's nothing so drastic that it's going to change their life like they thought maybe would happen if they had waited that year. year. So I do think that we're going to start to see more people come out of the woodworks. And like I mentioned before, I'm going to call it an arsenal. We have an arsenal full of people that need to buy homes that have put their lives on hold and decided not to do it throughout 2022. And I think as we get into the middle of 2023 and towards the end of 2023, I think we're going to see a completely different picture. And there's going to be people that just can't wait any longer. People whose families have expanded, they've had babies, they've gotten married, they've added, kids have gone off to college. They just don't need that big home anymore. There's going to be a lot of people whose lives have changed that have been putting things on hold that just can't wait. And so again, as I said before, and I've said it many times during the show, the best thing that you can do while we've got a slight dip in the rate right now, while interest rates could still be, down into the high fives at this point that you could be locking in, do something now. Stop waiting. Don't wait until interest rates are 7%, 7.5%, 8%, 8.5%. Those are all the different price predictions that we read about earlier in this article that they're expecting, analysts are expecting from all different walks and paths of life, universities, realtor.com, they're coming out of everywhere in these analysts, and they're ranging anywhere from 7.25% to 8.5% is what they think we're going to see by the end of 23. So why would you wait if you could lock something in right now at 6.5% or 5.875% or 5.75%? Don't wait, you guys. If you've been thinking about doing it and you don't have 2 years to sit on the fence and wait to go buy something, then do it now. Like literally just do it now. That's all that I can say. Thank you, Carrie, so much for the comment, because yes, I 100% agree with you. And I think there's even more to be read into that. So here we go. We're going to keep going. Let's see. So, Greg McBride, the chief financial analyst at Bankrate, said that he thought that things are going to remain limited, so it'll continue to be a balanced market. So that's where we left off. Krinsky expects leverage to vary nationally depending on the type of market. So this guy's saying, hey, I'm not going to really predict. I'm just going to say that depending on the market you're in, there's pockets. Some won't do well and other people will hold steady and others will do really well. So that guy didn't really give much of a prediction. So we're going to slash that one. So with the pandemic, we saw a new spike of bidding wars in suburban and smaller markets. And so that's what I'm talking to you guys about, is if we see this massive recession, we see property values drop by 10%, and we see interest rates drop in order to pull us out of a recession, in my opinion, Mortgage Mom's opinion, Debbie Marcoux, my opinion is that we're going to see very similar to what took place with the pandemic. So we're going to read this paragraph. It says, with the pandemic, we saw a new spike of bidding wars in suburban and smaller markets, likely because of the desire for more space and the increased flexibility of remote working across the country. Now that many offices and businesses are back near full capacity, it cut my page off, so I can't read the rest of that paragraph, but I'm going to go to the next paragraph. I'm sorry, I can't read the rest of his thought process. It cut it off where I printed it out. So it says, Johnson, on the other hand, anticipates sellers holding fewer cards. It will be a buyer's market next year, as many reluctant sellers, those waiting for the market to turn around, will likely capitulate, adding to more housing supply. So I believe what they were trying to say, that where we missed the paragraph, was that this person, Krinsky, did not feel that we were going to see the crazy turnaround like we saw in 2020 through the pandemic. And Johnson is saying, on the other hand, he anticipates sellers holding fewer cards. It will be a buyer's market next year. So 2024 will be a buyer's market. So, which is exactly what I'm trying to tell you guys. As many reluctant sellers, those waiting for the market to turn around, that's this year, 2023, will likely capitulate. So they're going to flip, and they're going to add more housing supply in 2024. So again, guys, I really think that we're going to see a really good 2024. That's just my opinion. And if you've been thinking about buying a home, I think it would be a really good idea to try to capture that now, this year, and earlier than later, to try to keep your interest rate as low as possible before we get to year end. So, will housing inventory increase? Here's the next part of this. A shortage of homes has helped fuel the frenzied market for the last few years, but experts differ on housing inventory projections for 2023. Well, isn't that something, right? They can't come to a decision. Nobody can tell you exactly what's going to happen. So we just have to read the data and then come to our own conclusion personally. So before the housing crash of 2008, inventory peaked at about a 13-month supply, twice what we would see in a healthy market. Today, we have about a 3-month supply, which is about half of what we need. So I hope you guys are hearing that. The craziness of 2008, the massive recession that we saw at that time, had a 13-month supply of homes. 13 months. Currently, we have about a 3-month supply. We need a 12-month supply to be normal. So I just want to make sure that you guys all hear that. To be in an average market, we need a 12-month supply. We aren't there yet. We've still got very limited inventory. Eric got on and said, are there many short-term rental homes that may hit the market creating more inventory? Oh, there are many short-term rental homes that may hit the market creating more inventory. Eric, there very well could be. That is definitely a fact. But me personally, I don't think that there are enough short-term rentals that are going to hit the market that are going to change or sway the complete nation. Now, maybe an area possibly that is a big Airbnb, VRBO kind of area, like let's say Lake Havasu City, there might be more of those short-term rentals out there. There's probably, I would guess that half of the city is probably short-term rentals, right? And so if you get a lot of those sellers that decide that they just want to sell, then yes, I think that is where in this article they're talking about, one of the analysts said that he feels like it's going to change based on, pockets and markets. I think that what you're saying is accurate. That could happen in heavily inundated Airbnb, VRBO kinds of areas. But I think that the normal suburban neighborhood, I don't think that there are enough short-term rentals in that we're going to see those markets get swayed as far as there being a ton more inventory to change the general outlook of, the predictions. So no, I love that. Thank you very much. That was a fantastic piece of information and statement. I thank you. I appreciate it. So let's see, let's get back to this. So today we have a 3-month housing supply. So we have a 3-month supply, which is about half of what we need. Current homeowners are unlikely to trade in their 3% for a new home with a 7% loan unless they absolutely have to. So existing home inventory should remain low. And builders have scaled back on housing starts for the past 3 months. That means we are not likely to see a huge boost in supply from new construction anytime soon either. So I'm going to I believe that Heather is still on with us. And Heather and I were talking about this probably about a month ago. We were actually seeing the numbers of the building permits that were being pulled by new builders. And they typically do that about a year out before they get the builds started. And we had actually seen that those drop dramatically. And this, I want to say, was about a month ago, but Heather can actually correct me, so she can jump into the feed and tell me when it was that we were talking about that and that we saw that. But for sure, I agree with that statement in this article. There's going to be quite a bit less building coming down the pipe, which means that there's going to be less new homes available. And we're going to have reduced and more limited inventory from sellers. So again, keeping inventories low, stopping a massive bleed in property values. That again is my opinion. But Heather, if you can find any information on that, throw that into the feed for us and I'll read it out loud. Let's see. But others foresee increased supply next year. Housing inventory will rise throughout 2023 as homes become more unaffordable due to high rates. So that is another prediction of what people believe is going to happen. I don't know that I don't know that I agree with that. I truly believe that if you're in a home and you have an interest rate of 3%, and in order for you to sell that home and go move somewhere else, you're going to have to take a new interest rate at the end of 2023 of 7.5, 8.5%. You're not going to. So I personally think that we are going to continue to see inventory stay low. But again, That's from the data that I've extracted and the opinion that I have created. So you get to extract the data and you get to create your own opinions, and you get to watch the rest of 2023 play out the way that it does, and then, see how right or how wrong you are. I mean, it's kind of cool to, make a prediction and then sit back and watch what happens. So Heather says, yup, here. And Heather, if you've got any of those building starts that we talked about, or you remember when we saw that, give me some information. I would love to hear that. All right. So next part of the article, will homes be more affordable? So one thing I do want to say is that I am going to say goodbye to those of you that are listening by podcast. It's exactly an hour where I cut it off. So this is so long. Goodbye for now. And we will see you next week. Same time, same place, Wednesdays. And for all of the rest of you guys, we're going to keep going through this article until we're done. So here we go. It says, will homes continue to remain financially out of reach for many purchasers next year, or will matters be better for buyers? If inflation pressures ease and we see meaningful pullback in mortgage rates next year, this will ease some of the strain on buyers, but only a bit, explains McBride. Prices will remain fairly steady, and in a lot of markets, that's a price that is 40% or more higher than pre-pandemic. Home prices will not fall proportionally, Shershkov thinks. Any fall in prices will not be enough to offset the rising interest rate and its contribution to the monthly mortgage payment as a result of the home prices. The impact of higher mortgage rates and lower home prices in 2023 will likely cancel each other out to a great extent. Johnson agrees. His take, overall home affordability won't change dramatically. So again, you guys, if you've been thinking about buying a home and you've put it on hold thinking that there's going to be some massive crash, interest rates are going to change. They're going to come back down. You're going to find your window. You're going to just execute at that time. If you're prepared to sit and wait and wait and wait, and you've got 2 years or 3 years or 4 years to sit on the fence and wait, fantastic. But if you don't, move on with your life. Start your search, figure out what you can afford, get into a home. Sooner you do, the better the interest rate will be. If interest rates do drop, you can always refinance that rate to lower that monthly payment. But again, how many times have we heard over and over again throughout this article that things are going to cancel themselves out? If we see a decline, I believe it's 10%. I believe that's the maximum that we're going to see. And again, that is my opinion, the mortgage mom, not a financial advisor. But what exactly is 10% when the market starts to turn? What is 10%? What does that really mean? When the market starts to turn and you're back into a bidding war and you're back to trying to obtain a property and having to go over the price that it's listed for, and you're trying to beat out other buyers looking at that same exact house, what does that 10% really mean? Not very much in the scheme of things, but you've secured a home, you have a tax write-off, you own a property, you've got security. There's so many advantages of owning a property, and when values do go up, yours is going to go up along with it. So even if it does come down a bit, you're going to go right back up and then some. So negotiate while it's easier. Negotiate while there's less home buyers. Get yourself a fantastic deal and refinance that house later. That is my opinion of the day. So Heather says she did jump in about the housing starts. Yes, last month in December, we were talking about the new home building in California had dropped about 29%. So again, less new homes available means more people buying resales. And California was number 3 in the highest drop. The largest decline was Texas, then Florida, then California. So Texas and Florida and California, guys, you aren't going to see as many new builds going up, which means that there's going to be more home buyers looking at resales. There's going to be less inventory because people aren't going to sell their home since the home that they're in is affordable for them at this point. So I agree with the cancel culture situation that they've got going on inside of this article. But again, worst case scenario, if we see a 10% drop and we see interest rates at 8%, you want to buy now. Stop waiting. Stop waiting. That, I believe, is, my it's my, what do you call it? News of the week. It's what I'm trying to tell you guys to do for this week. It's my recommendation of the week. There you go. It's the Mortgage Mom's recommendation of the week. Get on it. Get off the stick. Start looking. Buy something. Refinance. If you've got a second mortgage, if you took a home equity line of credit in 2021 or 2022, and your interest rate is now approaching 9, 10, 11%, which it's only going to keep going as the Federal Reserve continues to increase the rate. If you owe $100,000 or $150,000 or $200,000, which we have seen over and over and over again at interest rates that you thought you took a line of credit at 7%, get online, look at it. Is it really still 7%? Probably not. You're probably paying 9%, 10%, 11%, 12% easily. If you're paying 12%, even if your current mortgage is at 3%, what are you paying in a blended amount between your current mortgage and your second? Well, if you have a big mortgage and a little home equity line of credit, big deal, leave it alone. But if you've got a decent sized mortgage and a decent sized home equity line of credit or a home equity loan, maybe we want to get you into an interest rate in the 5s for a refinance and get everything consolidated for you. And when interest rates turn in the next couple of years, you do a refinance at that point to drop that mortgage even further. So again, you guys, just stop sitting on the fence, pick up the phone and make a phone call. Now, if property values do drop by maybe 10%, like I'm saying, I feel could be the worst case scenario. I feel quite honestly is a very good possibility of happening. If you've been thinking about refinancing, when we do a refinance, it's based on the value of your home. So if your property value goes down, but you still owe the same amount of money, which you will, it's not like making monthly payments every month is buying your mortgage payment or your mortgage balance down very quickly. It's going to be harder for you to do a refinance. If you end up where you don't have enough equity to do the refinance or you don't have enough equity to pull out that cash you were hoping for, it makes it more difficult as the property values drop to do that refinance to get you guys out of your debt. So please, again, stop sitting on the fence, pick up the phone and give us a call and let us talk to you to figure out if it's something that makes sense. And if it doesn't make sense, we are going to recommend that you do nothing. That is what is so great about me and my team. We are not here to push you and shove you into a program or into doing a brand new loan or originating something that doesn't make sense for you to originate. I am very, very strict about that throughout my entire office and my entire team. That is not the reputation that I want. That is not the reputation that we will ever have. We are not going to do a loan for you just because. We are not going to take advantage of somebody because we can. We are going to give you the information. We are going to show you the math, and we are going to let you make the decision if you feel that pulling the trigger on new financing makes sense for you. So please don't be scared to call. Just pick up the phone and do it and find out if this is something that you should be considering. How do you do that? You call our office. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Give us a call. Go to my website. Go to mortgagemomradio.com. You guys can find all the information that you could possibly need there on the website. You can contact us through the website. The phone number's on the website. Tons of calculators and information is on the website. So please take advantage. Utilize our services. Utilize the fact that we absolutely love to give education and push people in the right direction. And we hope from that, from what we love to do, you turn out to be our client and you turn out to be our client for life. So please consider that. So let's finish up this article and we'll be done for the day. So it says the bottom line on the 2023 housing market. Taking a big picture look at the possible real estate market next year, most pros are in consensus something of a transitional year characterized by uncertainty. The housing market will be tepid in 2023 with only lukewarm demand and a limited amount of inventory available for sale. McBride predicts, however, mortgage rates could pull back meaningfully next year if inflation pressures ease. So we are probably
most likely going to see that in 2024, interest rates start to come down, which is going to create more demand, which is going to see more homes for sale, which is going to see more buyers jump back into the home buying market. So once again, reconfirming that if you want to buy something right now, do it this year. Okay. The hope is that a supply and demand within the housing market normalizes. Interest rates can start to come back down to earth. Until this happens, those who simply cannot afford the cost of borrowed money will have to continue to wait. For those waiting on the sidelines, holding out hope that rates may soon drop, they might have to accept the fact that the lower rate financing windows open in 2020 and 2021 have closed. But if mortgage rates don't move much, that means borrowers will pursue fewer purchase loans, and we will see a continuing decline in rate based on refinance activity. With more homeowners staying in place, we also might see an uptick in home equity loans and home equity lines of credit over the course of a year. In other words, if moving will be out, remodeling will be in. So once again, let's sum it up to the very best that we can. Rates have a nice small drop right now that is lower than where we saw the peak of 2022. Most of the analysts agree that by the end of 2023, interest rates will be higher than where they are today. If you've been thinking about refinancing to do home improvement because you've decided that staying in your home is financially better than selling your home and moving into something bigger, think about doing your financing today, whether that be a refinance, a home equity line, or a home equity loan to get your cash, because if the property values do drop, that opportunity could go away. Interest rates are lower right now than where they might be down the road. So again, do your financing now before that happens. Home buyers, if you've been thinking that there's going to be this massive decline in values and a drop in interest rates, things are just going to flip and turn. They probably aren't. Chances of you negotiating with a seller right now, with there being lower buyer demand, are much better. You can definitely pick up a fantastic deal right now with homes that are listed and available on the market. The homes on the market, people have to sell. People are not listing their homes if they do not need to sell. So they are either getting relocated for work, their family is growing, and they've got, more bodies that they need to house. Something has changed in their life that is creating the need to sell. So you're going to have less homes. And if those homes are on the market and they need to sell, and we have less buyers that are willing to buy, then the chances of you being able to get a great deal, negotiate a great price, is really, really good. Don't wait until the last quarter of 2023 to decide that you're going to jump in, get your pre-approval ready so that you can buy in 2024 when rates start to come down. Property values have hit their total lowest that they're going to. Don't wait until that point, because if you're a first-time buyer, you've got a low down payment, you have zero down payment, you need closing cost credits from a seller to be able to pay for the closing costs. It is going to be very, very difficult to negotiate with those all-cash buyers, big down payment buyers, people that are selling their home to move into another and coming out with a lot of equity. It's just going to be very difficult. So that is going to sum up today's show. I definitely went way longer than usual. I hope that you guys enjoyed it. I hope it was informational and educational. And again, please feel free to reach out to the office for anything that you could possibly need. 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. I hope you guys have a great one, and we'll see you next Wednesday. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.